Okay, so next we are going to study about, or we are going to, approach a, a question where you're going to apply your knowledge about threats. Okay, so you must understand this is something that has been asked very earlier, but nowadays, or since 3 to 4 years, it hasn't been asked. Okay, but still ACCA has a character of always asking out of the box questions. Okay, so you never know when they're going to jump back towards the old format. Okay, so since we are already studying things, we just have to brush everything and go. Okay, so if it is not asked for an essay question, it is sure to be asked for MCQs. Okay, so either of the two would be there. Okay, so the question, Moodle case study, ethical issues. You are an audit manager. So who are you? You are an audit manager. Okay. And your company is Wimple and Company. So this is the audit firm. Okay. This is not the client company. This is the audit firm. Okay. A large audit firm which specializes in providing audit and accountancy services to manufacturing companies. More Company has asked your firm to accept appointment as an external auditor. So whom are you providing audit for? You're providing audit for Moore Company, all right? Has asked your firm to accept the appointment as an external auditor. Moore Company manufactures sports equipments. Okay, you need to understand your client, right? So your firm also audits Barker Company. So there is another company which your firm is going to, which your firm also attends to, and that is Barker Company. All right. Another manufacturer of sports equipment. Now, see, before we have studied about conflicts of interest, right? So here there is a conflict of interest between Moore Company and Barker Company. Why is that? Because both of the company are in the same industry, dealing with the same products. Okay, so the chances are they are rivals against each other, right? It would be naturally like that. Okay, if you are dealing with the same commodity in the same market, okay, you're going to be towards each other's throats, right? So Moore Company and Barker Company is conflict of interest. Okay, now you must understand this conflict of interest is something that has been repeatedly asked. They have never stopped asking that question. Okay, so you can always put a probability of 95 percentage of that being asked. Okay, it's for sure it is going to be asked for 4 marks or 5 marks. Okay, and if it is there, you have to answer it. So make sure you study that part. And if you're going to study that, you're just going to go through it, but you're not going to write the same. Okay, that means whatever is being given in the notes is your root. Okay, or it is your basics. So you have to study that basic and tailor that answer accordingly. All right, I'll be explaining how to tailor that answer. All right. Okay, next one. Another manufacturer of sports equipment, and therefore your firm is confident it has the experience to carry out the audit. So the firm is confident that it can take Moore Company. All right. So there is no issue in taking such a company because firm is already familiar with the industry. So the firm has no issues in taking Moore Company as well. Okay. You have been asked to take out the role of audit manager for Moore Company. So where are you placed at? You are for Moore Company. Okay. As an audit manager. All right. Now, you own a small number of shares in Moore Company. As you need to be an employee of the company, Don Henman, who has been engagement partner for Barker Company for 12 years. Okay, so you own. Where is the glitch? First glitch is where You own a small number of shares. And who are you? The audit manager, right? And you own a share in Moore company. As you need to be an employee of the company, Don Henman, who has been the engagement partner for Barker Company for 12 years, will take the role of engagement partner for Moore Company. So the engagement partner for Moore Company is going to be who? Don Henman. But what is the glitch? This particular person, that is the Don Henman, was a former employee of the company for 12 years in Barker Company. Okay. So there is a personal relationship as well. Okay. But he is not attending Barker Company, he is attending Moore Company. Still, he is in the same audit firm, right? Okay. The audit senior will be Tim Andrews, as his sister is financial controller. So we got the second glitch. Okay. So Tim Andrews is the audit senior. See, when you have an audit carrying out, there are different positions in the same team, right? So there is an engagement partner who's the senior most member. Okay. And there would be an audit senior if it is there. Okay. Who's going to be the next senior. Then there is the audit manager, and then there is the audit team, right? So, then there is the audit junior auditors, right? So there are many hierarchy within the audit team itself. All right. Okay. So the senior most person is the engagement partner, and then comes the audit senior. Okay. And then comes the audit manager, and then comes the senior most. This hierarchy is going like this. First is the engagement partner. Okay. Second is the audit manager. Okay. And third is the senior audit senior. Okay. And last one is the junior auditor. All right. So like this, there is hierarchy. Okay. So like every other departments, there is also hierarchy in the audit team as well. Okay. That hierarchy is listed here. All right. Okay. Now continuing. So what is the glitch here? Coming back, Tim Andrews. Tim Andrews is the sister. Okay. And this sister is the financial controller of Moore Company. Okay. So Tim Andrews is the sister, and this sister is the financial controller of Moore Company. Okay. And he also knows the business too well. Okay. Now, your firm recently purchased some BIPs, football, and other equipment from Moore Company for the firm's annual football tournament. Okay. So there is also another glitch. Okay. Moore Company has offered to provide this equipment free of charge to the firm if they accept the role as an auditor. Okay. So this is something that is a threat as well, because accepting gift and donation is a threat. Okay. Next one. Moore Company would also like your firm to provide taxation and accounting services. Okay. Specifically, the company would like you to prepare the financial statements and represent the company in a dispute with the taxation authorities. Okay. So there are two threads under the same thing. One is the self review, and the other is going to be the advocacy thread, because they have been asked to represent the client firm, right? The fees for last year's audit of Barker have not yet been paid. So there is also an outstanding fee that is pending. And you have been asked by Don Henman to look into the matter. Okay. So this is and you have Don Henman, of course. He was a former employee in the Barker company. So you should remember that. Okay. So this is a scenario. This is relatively a long one, right? For the exam purpose, you're going to have a short paragraph from which, instead of asking these many ethical threats, they are going to just ask you three ethical threats. Okay, if at all it is there. Okay, this question, that is the question from essay questions from threat, hasn't been asked since 3 to 4 years, but we never know what ACCA would ask in the future. Okay, so make sure you're prepared. Now, what is the requirement? Describe the steps Wimple and company should take to manage the conflict of interest arising from performing the audit of Moore Company and Barker Company. So here, something that is really important is how they have asked the question. See, they have specifically mentioned about Wimple and Company. They have specifically mentioned about Moore Company and Barker Company, right? So ACCA is not asking you what are the conflicts of interest, what are the safeguards that you place on the conflicts of interest. They are not asking you that. They are asking you what is the safeguards that is to be performed for the by the Wimple and Company against Moore and Barker Company. Okay, so they are not asking you to write the theory question. Okay, that is a difference. Now, this question can come in two ways. Okay, the first way is where they are going to blindly ask you what are the safeguards of conflict of interest. Okay, there would be no mention of any companies there. There has been some issue with the connectivity, so I'm not sure if things I've said for the last couple of minutes have actually been recorded. And I'm going to say those things again. Okay. So, yeah, the difference is that this particular conflict of interest question is going to be asked in two ways. The first way is where they're not going to mention any company's name, but they're going to directly ask you of all the safeguards that are required for conflict of interest. Okay. The second method they ask is they're going to specifically mention about the companies that is there in the paragraph, and then they are going to ask you of conflict of interest. Okay, so most of the students, this is a common question that is being asked. All right, so what happens is that most of the students, they directly, involuntarily they just start answering that on the perspective of the theory that they learned earlier, right? Now ACCA is not going to give you marks for that. Okay, so that is the difference, and that is why most of the students fail to crack double A, because they are going to study things and throw up. Okay, so, but ACCA doesn't want that. Okay. So here the difference is that instead of copying and pasting what you have studied, they want you to specifically dive into the paragraph. That means you have to mention about the company and what they are doing. Okay. Or you have to mention how these two companies are going to deal with it. Okay. So the first question is for safeguards, right? Okay. Now, you're not going to answer it, in a way that you have studied before, instead, or in a way that you have studied in the theory part, but instead you're going to mention is like this. Okay. That instead of just blindly writing like the company should have two separate audit teams for the two rival companies. Okay, instead of writing like that, you have to mention which company. So which company is that? Wimple and Company. So what do you write? Wimple and Company. Okay. uh, should, have two separate audit teams for Moore Company and Barker Company to maintain confidentiality. So, understood? So, in this particular safeguard, I have mentioned things about the audit firm. I have mentioned which all firms are involved in conflict of interest, right? So, ACCA wants that. ACCA wants your application instead of your knowledge. Understood? Okay. So, dealing with this, first and foremost, when you have a conflict of interest, as a client company, it is your duty to inform all the companies involved, okay, that there is a competitor that is an audit client for them as well. Okay. So the competitor would be aware of the other competitor being the client company of the audit firm. Okay. So how do you mention this? This is like, it goes like this: Wimple and Company should inform Moore Company and Barker Company of the conflict of interest, okay, uh, or about the engagement of Barker Company, which would create a conflict of interest, and obtain their consent. Okay, so you have mentioned the audit firm, you have mentioned the other two companies, right? Okay. Next point would be like, okay, the Wimple and Company should appoint two separate audit teams for Moore Company and Parker Company. Okay, so there too, I have included the audit firm and the conflict of interest company as well, right? So this way, all the answers that you have, sorry, all the theory that you have studied before, you're going to apply with the scenario. All right, so that is the key. Okay, I would stop there. Make sure you study that and apply that. Next, explain 6 ethical threats which may affect independence of Wimple and Company in respect of the audit of Moore Company or Barker Company. And for each threat, identify ways in which the threat might be reduced. Okay, so you are required to explain 6 threats, right? And you see the mark is 12. Okay, so how they are going to split is, they're going to have 2 columns ready for you, and the first column would be of threats, that is ethical threats, and the second column would be of safeguard. Okay, so if it is a 12-mark question asking you about 6 ethical threats, then they are going to divide the mark as one. Sorry. So for 6 ethical threat, there is 2 marks each, right? Okay, so if you write the threat correct, you get 1 mark. If you write the safeguard correct, you get 1 mark. So like that, 2 marks each for 6 threats. Understood? Let's move on to the first threat. Okay, let's see. And also I forgot, sorry. When you're going to write the threat, okay, you're going to have this format. Okay, the threat format is, first of all, you're going to have a heading. Okay, which threat this falls under. Okay, what is the threat? What is the topic? Okay, this heading is going to be the topic of the threat. What is the threat? Okay, in a shortened version. Okay, now you're going to describe the threat. That means what had actually happened. Okay, in the third case, in the third case, this is the second one. In the third case, you're going to mention which threat. Mention the name of the threat. And fourth one, you're going to mention as what has been compromised. Okay? Or sacrificed. Which of the fundamental ethics, fundamental principles have been sacrificed. Okay? So this is going to be your format. Okay? Now let's see. The first one. The first one, you are an audit manager, right? What is the problem? You own small number of shares in Moore Company, right? Okay, let's see. So for the heading, you're going to mention it as What does this come under? When you have studied threat before, this comes under financial interest, right? There is a financial interest for the audit manager in the Mure company because he owns share, right? So the heading would be financial interest. Now, the second part is really simple. You just need to copy paste the thing that is there. Okay. So the audit manager, how would you copy paste? The audit manager, okay, owns a small number of shares in More company. That's it. That is done. Okay. So second one is copy paste. Third one, mention the name of the threat. So what threat is here? Self-interest threat, right? So this is the first one. Okay. So self-interest threat. Okay. Now, why? Why mention the threat and why? Okay. So why is it a self-interest threat? Because since the audit manager holds a share in the More company, he might be reluctant to adjust or to, you know, dive into the FS of the More company because it would actually affect his financial interest, right? So the audit manager would refrain. So what is it that you're going to write? See, I'm using my own language. So think of it this way. Okay, you would have it in mind, right? What do you think? If you own a share in a company, you would never, bring out the bad in the FS, right? Because it is directly going to affect you. Why is that? If the FS is wrong, you have to adjust it. If you adjust it, the the chances are the dividends or the profits that you get from that company is going to get reduced, right? Or maybe even worse, the company is going to get in trouble because they have misstatements, right? So you are never going to out that, or you are never going to tell that to others, right? So that is your cue. Okay, so that is your cue. You're going to mention why. So listen to me carefully and type it down if you can, because typing is what you need. Okay, so this is the thought. Now this thought is going to get a sentence. Okay, so what is that sentence? What was the name? The audit manager. Okay, so the audit manager may refrain from adjusting misstatements in the FS, okay, for the fear that it might affect his value of returns from the More company. Okay, so this is the reason. Now, what does this sacrifice? This sacrifice the objectivity of the audit manager. All right, so that's it. Your question is done. Now, what is the possible safeguard? That is the thing that you mentioned here. Now, if you see that, if you have mentioned this much, they're going to give you half marks. If this much is correct, they're going to give you half marks. And the half is going to be for this one. All right. Now, the second one, safeguard. So what is the safeguard? The safeguard is going to be, he is going to dispose of all the shares in the More company. That's it. So the first is done. And if you have got these things on your paper, you get 2 marks. Next one. Your firm recently, no, not that. Okay. Don Henman is the former employee of Barker Company, right? So you're also taking Barker companies. You're not also, you have been taking Barker companies uh, audits, right? You want a small number of, as you used to be an employee of the company. Oh, sorry. So the More companies audit manager is you, right? But and you also own a small number of shares. Okay, and why did you get that shares? Because you used to be an employee of the company. Okay, clear? So you were an employee of More company. So tell me, What is the heading going to be? Prior year employment with the client. Okay, or prior employment with the client, or former employee of the client. So this is your heading. And the second thing, describe. How are you going to describe? Copy paste. Okay, the audit manager used to be an employee of the company, so instead of writing company, you're going to mention the company's name of More Company. Clear? So how does this, what threat does this create? If you have been an employee, you would have done the work in that company, right? So you're going to create a self-review threat. Clear? Okay. And why is that? Because how do you create that threat? Just simply explain what we have discussed now. Okay. That is, since the audit manager has been an employee or has been previously been an employee in More company, he must have done uh, any many important work in the company, okay, which would again be, you know, again be audited by the Wimble and company. Okay, this would create a self review threat. That's it. Okay, now this also would create a familiarity threat as well. Why is that? It's not just self review threat, it would create a familiarity threat because this person worked there. Okay, so if he worked there, he knows the people there, right? So this would also create a familiarity threat. Okay, so you're going to write it as additionally, or in addition to self review threat, there would also exist a familiarity threat. Okay, since audit manager has been a previous employee, he is familiar with the other employees of More company. Okay, and full stop. And then we are going to write this would these two things considered together would cloud the judgment of the audit manager, and he may not make necessary adjustments to the misstated FS. Okay, and thus the auditor would lose his objectivity. Okay, and this is something that you're going to write. Okay, so when you're going to listen these things, type it down. Okay, because typing is what we need. All right, now what is the safeguard? For this, the safeguard is that this particular audit manager is not going to audit More company. Why is that? Because he has already worked there. Okay, so there is no chance that this person is going to do the audit. Clear? Simple as that. Now, next one. Let's see. Next one is this is another scenario. 12 years engagement partner for Barker company for 12 years, right? So tell me, what is the condition? For the engagement partner, it is only allowed for him to, oh, sorry. Since he is a 12-year, he is going to take on More company, right? So he's not there. Okay. But you should also remember, no engagement partner should work there, should work in a client company straight away for more than 7 years, 7 consecutive years. All right. Now, next one. This one. Audit senior will be Tim Andrews as his sister and financial controller at More company, and therefore knows business well. Okay, so you need 6 ethical threats, right? So you got one here, you got two here. Okay, we discussed two, we're going to discuss three. Okay, the audit senior will be Tim Andrews as his sister is the financial controller of More company. So the heading is going to be personal relationship. Okay, and then you're going to take the copy paste method, that is the uh, sister, the financial controller at More Company is Tim Andrews' sister. Okay, that is going to be your explanation. Okay. Now, the next thing that you do is you're going to mention the threat. Okay. So when you mention the threat, there are two types of threat. One is the familiarity threat, and then is the self-interest threat as well. Okay. So you're going to mention it like, you're going to mention it as, why is that a self-interest threat? Since the sister has been working in the company, Tim Andrews might feel intimidated, right? Because he is not going to call out the company where the sister works, because this is going to affect his sister. Simple as that. So you're going to put that in words and type. Okay. Now, the next one is that this is going to, since the sister is working in the More company, okay, and Tim Andrews might not make the necessary, or might not find, or might not audit the misstatements in the FS, since he may feel intimidated that his sister might lose the job. Okay, so that is your explanation. What does this create? This is going to compromise the objectivity and independence of Tim Andrews. So that is going to be your answer. Now, what is the next thing that you do? Okay. Now, Tim Andrews has a relationship with someone very important in More company, right? His sister works there as a financial controller. Okay. So the best safeguard is that he shouldn't be on the audit team. Understood? He should not be on the audit team. Clear? Now, 3 is done. Fourth one, your firm recently purchased. Fourth one is the gifts and hospitality that you studied, right? So you're going to write the heading as gifts and hospitality. Okay. And then you're going to copy paste this. That is, firm recently purchased some bibs, footballs, or just you're going to say like, the firm has recently purchased some items from More company. Okay. Now, what does this create? What threat does this create? This is familiarity as well as self-interest threat, because you fear that in the future you may not get this for free, right? So it is both. Okay. So since the client is going, since the auditor is going to be indebted to client, or they would have a soft spot for the client, right? Because they got so many things for free, right? Free of charge. Okay, so that is going to be your reason on why the threat exists. Okay, so that is the auditor might feel indebted to the client. Okay, since they have been offered free of charge goods for them. Okay, and this would affect them not providing correct audit opinion, or this would make them not find the misstatements in the FS, even if it exists. Okay, sacrificing the objectivity and independence of the auditor. So this much is going to be written. Okay, now the safeguards. Okay, regarding the safeguards, gifts and hospitality, there are two things that you're going to consider. First things first, you're going to measure. Okay, so you're going to measure all the things that is being purchased. Okay, and if it is a very trivial amount, which is not going to affect you at all, that is a very trivial amount, then it can be accepted. Okay, but however, if it is not trivial, okay, or if it is trivial but very important, you shouldn't accept that. Clear? Okay. And why shouldn't you accept that? Because this is a form of, bribing, right? So if you buy this, we are going to appoint you as an auditor. If you don't buy, uh, sorry, if you are going to, be our, we'll give you this. You can be our auditor. Okay. It's like, trapping someone into their, into being the auditor, right? So this is not done. This type of behavior is not done. So you have your fourth one there. Okay. So we have the fourth one. Next one. More company would also like your firm to provide taxation and accounting. So we have discussed this earlier. So you're going to mention the heading as non-auditing services provided. And what is the explanation? Just copy paste. Moore company has asked to provide taxation and accounting services for the taxation services from the company. Okay. And which threat is there? Self-review threat, right? And why is it self-review threat? Since the part of the taxation and the accounting processes are going to be done by the audit firm itself. It is this would create a self review threat because the audit firm is never going to admit their may not admit their misstatements in the FS, which would hinder the audit opinion and would sacrifice the objectivity and independence of the audit firm. Okay. And then as a safeguard, you're going to write, you have many things there. Okay. You can have two separate teams. Okay. Or you can do things that are not going to affect the FS as discussed earlier. Okay. So if you're going to attend this question, make sure you are thorough with the threats and its safeguards as well. Okay. So study that well and then attend the answer. So you have your fifth one here. Now, last one, the fees for last year's audit. So this is outstanding fees. Okay. So this is outstanding fees. That is the heading. And you're going to copy paste the fee of the last year's audit of Barker company has not been paid. Okay. By and you're going to leave it at that. And you're going to mention what is the threat. This threat is going to be a self-interest threat. Okay. And it is also going to be an intimidation threat. Why is intimidation? Because you fear that this person might not give you your fee if you give a negative opinion, right? So you're going to mention the threat. And why is that threat exist? Because there is a chance for the company not paying the money if the audit firm is going to go into focus over the misstatements of the FS. Okay. And this would create a self-interest. Okay. And an intimidation threat because the audit firm fear that the outstanding fee may not be received, which would compromise the objectivity and independence of the auditor. Okay. So this much is going to be written. And as a safeguard, you're going to mention it as what we discussed earlier in threats and its safeguard, right? About the overdue fees. So what are you going to do? Either you're going to obtain some partial payment from the client company. Okay. Now you're not going to proceed further until some amount has been paid. Okay. Now, if the company has not paid anything, you're going to refuse the audit. That means you're not going to do the audit. Clear? So you have 6 threats. You can get another threat as well. Okay. It may be there in the answer key, it may not be there, but here we have found something, right? That is, see, this particular engagement partner is there in the company for 12 years. So this exceeds the time given or the safeguard given, right? So it is an example for long association. Okay, you're going to write the heading as long association and then copy paste. That is, Don Henman has been an engagement partner for Barker company since 12 years. Okay, so 7 years has already passed, right? This would create a familiarity threat. All right, and then you are going to mention why. Because since he has been engagement partner since 12 years, he might be familiar with the client company more. Okay, this might make him, or this might make him refrain from finding misstatements or detecting misstatements in the client company's FS. Okay, which would compromise the objectivity and independence. Okay, and then you're going to stop. Then you're going to mention the safeguards that we studied earlier. Okay, remember, for the engagement partner this much years, for the audit manager this much years. Okay, so go back and write that safeguard as a whole. You need to write them whole. Okay, now I hope you have understood this. When you're ready, just pause the video and get back to me if there is any doubts. Okay, thank you.